One of the number one questions that I always get is, what do I do with my interest rate? When do I lock the rate? When can I float down my rate? What if the market changes? What if the market goes up? All these crazy questions. So today we're going to quickly go over this and try to keep it as simple as possible. My name is Ka Mooney. I'm a licensed mortgage broker in all of the East Coast, here to help you break down the mortgage process and make it as simple as possible. All my information is below. We are more than happy to book a consultation with you, go through your specific financial scenario. There is no fee. There is no obligation to your credit. There's no credit hit. We work through your specific situation and we help you identify what makes the most sense at this stage of your purchase journey for you. So, number one question is related to rates. A lot of times, people don't understand when to lock their rate. They think they should do it before they even have an accepted offer. Once you have started the home buying search, you're not going to lock your rate until you can lock your rate beforehand and early on before you're formally in contract. In the state of New York, it is not super strategic to lock your rate until your offer is now under contract and you have a fully executed contract. Why? A lot of things can change. You're going to have an inspection done after the accepted offer. Negotiations may occur. There might be an extended period of time where negotiations are prolonged and this is adding days on. If you already locked your rate, you're losing days of that rate lock. So, specific to New York or any attorney state, once you have that fully executed contract, we're going to look at the on or about date. The on or about date is more than likely a suggestion. And the reason I say that is because in Florida, the closing date is the closing date. You are going to close on that date unless a crazy circumstance occurs. In New York, if the suggested date is September 15th, you still legally have 30 days past September 15th to close. So if the seller isn't ready on September 15th, there's really no harm or no foul to them. And same thing with you. You legally still have another 30 days per your contract. So we're going to look at the contract date, number one. We're also going to have an understanding of what is realistic for the seller. If all their stuff is still in their home on September 10th, and that is only leaving them 5 days to get all their stuff out, chances are you're not closing on September 15th. So we need to understand when is actually realistic for them to close on time and what the date is. We then time it backwards. So now we find out our contract date is September 15th, but Mr. Seller can only leave on October 10th. That's basically a month later, let's just say. We want to make sure that we're covering your rate for longer or up to your closing date. So if at the jump, we locked your rate up until September 15th, and then the seller said, hey, I can't leave. I'm not moved out. I'm not packed. I don't have the ability to leave my house yet. If your interest rate lock ended on September 15th, you would have been subject to rate lock extension fees. So this is why we need to understand that period. What is really realistic for the seller in attorney states? Once we have that understanding, we'll lock the rate and we're going to cover you through your closing date. Now, within this period, things change. The market changes, rates drop, rates might increase. The good news is when you're locked, you're locked. You're holding on to that rate and it will not change. And you're going to have that for the life of your mortgage. Now, the benefit of a mortgage broker is what we can do is we can take the rate, and let's say the market significantly improves 2 weeks before closing. This actually happened to one of my clients. You're not stuck at that rate. If you go with an institutional banker, most times when you lock the rate, that is it. It's solidified. With us, we actually have the ability to do a float down. So what in the heck is a float down? A float down is the market improves. We take your current rate. Let's say your rate is 6.5. The market's now at 6%. We're not going to let you sit at a 6.5% rate and close with that rate when the market is improving. Let's say we still have 2 weeks till closing. We could float down your rate to that 6.5 to that new rate to 6%. So you're going from 6.5 to 6%. Your monthly payment is going down, and there's no cost for doing this. We take full responsibility for watching the market and advising our clients of these opportunities. So if you have questions, you want to be strategic with your rate lock, please reach out. We're more than happy to go over it with you. We do have the ability to float down your rate. And the other thing to be aware of is we can always switch lenders to newer rate sheets as a mortgage broker. So again, no cost to you as the buyer, as the consumer. We can either do a float down option, we can move lenders, and we can pair you with a new rate sheet with the new lender if time permits, if we have enough time before closing to help you take advantage, lower that rate, lower that monthly payment, and we are more than happy to do so. Click all the information below to help you get started. Thank you, and we look forward to hearing from you.